Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, October 20th, 7:06 a.m. As I'm starting the video, taking a quick look at futures. Looks like we got a baby rally trying to start up here. The indexes were red and now they're pushing into green territory. Oil up 2%, copper up 2%. On the economic front, macro front, jobless claims, Philly Fed, existing home sales, leading economic indicators, nat gas inventory at 10:30, 5-year TIPS auction at 1 o'clock, and we got 4 Fed speakers spaced throughout the day. Over on the earnings front, we got American Airlines and Alaska Airlines and Dow Chemical before the bell. After the bell, we got Snap, CSX Railroad. That'll be kind of interesting. First one to report in that sector. Boston Beer, ticker SAM, Sam, and Whirlpool. Those were the bigger ones that I saw. And I forgot to mention, if you're new here, please run your player at 1.5x. I think you'll find that the most productive speed. Okay, I was contemplating not even doing a video this morning. We are trapped in an epic battle for control. We've been in this trading range, really battling a rising dollar, rising rate environment, which, as we've discussed, all along, bearish equities taking liquidity out of the system, and paired with, have we reached peak bearishness in sentiment, positioning, etc. We put in a recent low and we haven't violated that yet. So as long as we can stay above, there's a chance for, however you want to call it, bear market squeeze, counter trend rally, etc., etc. But the bigger picture is, I think, bearish equities, at least short term, while we've got these rising rates and rising dollars. So what I wanted to show you here, dollar maintains its strong upward trend. I went ahead and tried to pull the 10-year bond yield. Now, I cut this off at 1995 just to show you where it's at. But, if you went back to 1981, you'd see bond yields, close to 20%. But here we are at 4.13 on the 10-year. And you can see we got to go back to the great financial crisis to get numbers that were higher. And really the next big level, you can see we come across here. The scale is very compressed. So, we need to go out to a daily or weekly chart to, really zoom in on this. That wasn't the point of the showing you this graph. What I'm saying is that you break through this level here, kind of like right where we're at right now, overhead resistance, and you could have a flash move up to 5% in a heartbeat. You see it here. You have a line of resistance, support, 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 resistance, resistance, and now that could be a blow off top kind of move where you break through and then run up the flash 5% and then, come back and consolidate or do whatever it wants to do. But I just wanted to show you a pulled back perspective on what bond yields have been doing. VIX still holding this 30 support, above which really kind of hard to get too excited on the long side. what we got to see is a break in trend. Preferably, breaking 30 to the downside would be a start for a bear market rally, and I think it would pick up some steam if we broke to the downside on 29. But support is support until and unless broken, and what you'd have to conclude on a technical basis, the door is still open for a move back up to these prior highs along this line of say 36. Bitcoin still compressed volatility. I just have to imagine that whichever way this breaks, it's going to be an explosive move, building a lot of energy there. And as we've discussed, you can see buying under the surface, as we bounce along the bottom in price, momentum higher, grinding higher, and RSI grinding higher, and it's being pinned down. Price is being pinned down by this downtrend line. So you could, well, I don't have enough resolution here to say exactly where your alarm or entry should be. You've got the 50 dropping in here at 19,862, but that's $500 away. So I don't know if you want to wait for a breakout of the 60. It depends on what you're really going for here, of course. But all I want to say is that compressed volatility leads to expanded volatility, and if you get on the right side of it, that can be a great trade. Oil bounced back yesterday, almost 3%. We've been wrestling in this area. If you wanted to, I haven't done it, but I can just tell this looks like either a 50% or a 618 retracement down in this 82.5 area, and now we've got the exponential moving averages and lateral resistance overhead that price will need to grind through if it's going to go back up and ultimately break out. But we do have the breakout from the downtrend channel. We had a pullback that held support, higher low, higher high, higher high, higher low. So the stage is set for a move back up. We're just going to have to wait and see if these support levels hold and if price can break out above. Nothing to see on the oscillators right in the middle. Same thing on NASDAQ. SPY toggling around 370. I still think that's your central pivot on SPY. You can see it here. Pop above. Lot of traffic right in here. Back testing the downtrend channel, lifting. I still think, like I said, 370 is the key. Likewise, on the Qs, I think 270 is the key, the central pivot. Stay long above that. And you can, the reason that's the level is that's the June low. So we're shooting long against that after having a fake breakdown and a recovery of that level from below. That sets up for a potential move higher, but we got to fill this gap and get above 280 and then move to the 50 to really have anything kind of going at all. You can see the resolution here on the 1 hour chart, just real choppy trading. If you've been in the trading room, this is kind of a max frustration environment. Right when you think you're getting something, you can see a wick here. it reverses and comes back. So anyways, they'll you know how trading goes. There'll eventually be a move, whether that's rolling over to fill this gap, or breaking out to fill this gap above, and you just got to bide your time and wait. Be patient. Try not to get chopped to death, in and out, in and out, in and out all day long, waiting for something to happen. Maybe set your entry a little bit higher, or a little, depending on what you're trying to do. I think above 270, you want to try for long, as long as 270 holds. But you may have to move that level up to 270, 250, just because you can tell all this chop, unless you're that good. I mean, if you can trade a 250 range, more power to you, but often that's a difficult trade. Talked about IWM daily. 170, in my opinion, is your central pivot. I drew out a little bit more what we've been dealing with here, because it's a nice technical study. $6 wide trading range breakout resulted in a $6 wide move. We went from 170 to 176. We came back into the range, which we know is bearish. And although we didn't make it on the first run, we came back up to resistance, and eventually came down to tag the bottom of the box, which now is a $12 range. And lo and behold, bottom of the box held, made it to the top of that $12 range, and now we're down at the midpoint. So we're at the midpoint of the range at 170. That's why it's the central pivot. You can see I've drawn a little uptrend channel. You lose 170. Odds on favorite, you fill the gap down to 167 and probably even go down to 164. Top of the box, bottom of the box. But as long as 170 holds, your first target is 173 at the midpoint, then 176 at the top of the box, and then on a break of 176 to the upside, you're looking for that $12 measured move up to 188. And as we discussed, then you got multiple gaps up here that can fill and take it beyond that measured move. Meta not doing anything. 134 remains the first pivot, and then you're in that $8 range, opening up the door to 142, except the fly in the ointment is the downtrend channel line and the midpoint here at 138. So there's going to be resistance along the way. Apple, I still maintain that 142 is your pivot, and you're looking for a breakout above 145.50, get above the downtrend channel, and then you got gaps to fill to the upside. But just like everything else, choppy trading between 142.50 and 144. That's not a lot of room to work with. And I think if you are committed to trading Apple, you buy at 142 with a stop below, and you're just looking for a move higher, and you'll have to decide when and if you want to take it off and roll higher, or take it off and take a shot at it being rejected here, you see it had trouble. It would certainly be an objective trade to flip short. But if it breaks out, then you got to flip long very quickly to take advantage of what could potentially be a more explosive move above the downtrend channel to fill these gaps and run. Tesla, of course, had the earnings reaction last night, which wasn't good. What I wanted to show you here on the weekly is just where the ledge is, and you've got a big ledge here at 200. I did not see exactly where it was trading. We had a big ledge here at 220, 218, but it has definitely broken that. Now remember, these candles don't finalize until tomorrow at 4 o'clock. So there's nothing that says we can't, go down to 200, make a tag. See all this support back here? Looks below and then closes at 200. We could have a wick that comes down to 200, but then they buy it up. So be ready for that move, and you'll get resolution on that in your, on your daily or shorter term time frames. But my point here is, you lose 200, by tomorrow afternoon at 4 o'clock, say it's, 195 or something like that, then you really open the door for a much bigger move down into the low 180s, potentially the 160s, and then, right on down the line. I don't think Tesla would do that independently of the whole rest of the market, but it could certainly lead to the downside if sentiment truly cracks on Tesla. Have it break, and then the broader market end up rolling over. You could certainly see Tesla breaking and leading to the downside if it can't hold 200. Microsoft, same thing. Buy 235, stay long against it. If you lose 235, chances are this gap will fill. But you can see how big a line is forming here at 235. All this support, resistance, all this support. Every time it comes down, at least so far, to touch 235, that has been a good buy. Amazon, I still think 115 is the central pivot. We did drop below. We found a little shelf down here at about 113.50. You can see it here. But I think above 115, you want to be long for this potential gap fill up to 120. Google, it broke out, came right up to 103, came back in the range. That's not especially helpful, but it did hold at the top of the gap right here at about 199, give or take. What you want to see is a recapture of 100 with some market moves higher. A big green day on in the market at large, and then see if you can get a move up towards 101.50 and 103. But I mean, by and large, this thing has been soggy. You can see that for the better part of a month and a half, it's been in a $6 trading range between more or less 97 and 103. So not the most energetic in the whole wide world. A lot of activity on Netflix. And I wanted to just draw out for you, especially for those that aren't really familiar with the bracket trade. We had a prior existing gap on Netflix that ran from 248 to 348. Remember that $100 gap. And then yesterday on earnings, the prior day opened or closed at 240.86. Opened up into this range. We made a low at 262.55. They bought it up and then they pulled it back halfway. Very, very typical type action. You get that first move. You can see here that 279.30 was almost this initial high, and we had two candles that came up to kind of verify, double check that high, and then they pulled it back 50%. So what you do is you create a bracket with the high of the day and the low of the day being the boundaries of the bracket, marking the bracket. And now you can decide either to trade within the bracket because it is a wide range. For instance, here you can stay long against 270, or you can say, I'm just going to play the bracket edges, right? 279.30. You can try a short there against the highs and see if it pulls back. Or if you get a move to the bottom of the bracket, you can try a long there. But if the central idea behind a bracket trade is you follow price out of the bracket. So if price is able to take out this bracket high, you take it long. And what's really interesting about this particular setup is you've got big gaps on either side. So you get a break above 280 here. There's no technical resistance until you fill the gap at 348, which is more or less $70 away. And by the same token, you break lower, say the market or this particular stock falls apart, you've got a $20-something gap to the downside to fill. So really interesting setup here on Netflix, and I think it can be a really productive trade for you if you set your alarms where you want to enter, where you want to go long, where you'd want to go short, and be ready to go because of the tremendous width of these brackets. I think if there's some kind of a short squeeze or market counter trend market rally, I think you might not make the full, it might not close all the way to 348, but it's going to have some room to run. And likewise, if this thing fails, it's going to have some room to the downside. So when the premiums are high, like they are right now, you kind of got to have a runner. You can't sit in a stock or an option like Netflix and just kind of twiddle your thumbs with price moving, plus or minus 1% a day. It'll just kind of eat your option alive. What you're trying to do is, catch a runner where, that thing could double or triple in a day kind of thing. If, this thing is up, $20 or down $20 in a day. And I've seen it happen before. Don't think that that's ridiculous. It can certainly move that much in a day. Semiconductors is just in the weeds, nothing going on. ARC-F, we did get the horsepower to the downside on a soggy day. So, I don't have the 60-minute charts up here, but if you're actively trading them, you've got really nice pivots here above 1575 on the finance one. Genomics here lost that 3150 pivot. If things get ugly, you could be coming down here to 2750. Flagship fund lost 36 as that big pivot. Notice price below all the moving averages. And remember, the rising rate environment is most toxic to high valuation names, right? It's not going to affect a stock that has, a market multiple as much as a stock that has a PE of 200. It's going to hit those stocks a lot harder. And, when we have these sharp interest rate moves, it's gonna hammer the ARK complex more, because these ARK names tend to be real high PE, real high valuation names. ARKW, talked about the breakdown, the back test. That looks to be playing out right now. Got rejected at this 46 on the back touch, so the door is open for lower here. Spinning through the refiners, you should notice right away these charts don't look anything like the other charts. We've laid out the fundamental thesis on these with expanding refining margins, expanding crack spread. You got the big breakout on Dino yesterday, 3%. Now you got blue sky above. You can be long against the top here at 57.50. Hopefully, if you've been playing along at home, you had that alarmed yesterday and were able to take it. PBF, another refiner, right here at the highs. I would certainly consider taking PBF long above 44. Phillips 66, 2%, grinding higher, riding the 8-day higher. We've got a prior high up here at 110. Certainly the door is open for that move as long as oil and the crack spread cooperate. Valero, more or less, you got a $20 to $22 trading range. You can see it here, top of the box, bottom, top, trying to break out with a $20 to $22 range, and that on a breakout that takes you right up to 142.50, right at the prior highs, with not a lot to stop it. So I really like that one. I wouldn't go nuts and have, I got 4 refiner names and all this kind of stuff. I like this setup here because you're getting the breakout. I like PBF because you're not too late. You're buying the breakout. And you got this double bottom structure in place. In general, though, birds of a feather flock together. So if refiners are working, they're all going to work to varying degrees. ExxonMobil, finally, 3%. I told you yesterday, we've been in October 100 calls. Got an early pop yesterday up to 103, and I sent out a note that I took it off, and then I re-entered back above 103. So earnings are next Friday, so I just bought one more week, and I'm at the money at 103. So if there's a hopefully breakout here, get a week-long push, get up 105, 107, whatever it wants to do, and then see how earnings plays out next Friday, then that would be a good result. And for those of you that may be new, even though oil has been kind of soggy. The integrated names have refining capacity, refining as part of their business unit. So in general, your ExxonMobils, Chevron, ConocoPhillips, Hess, all those big integrated names have been holding their own, even though the oil price has been soggy with the SPR releases and all that kind of stuff. So let's see if the Bulls can win this tug of war, or if the Bears are going to prevail. I still think we've got great pivots to work with. We're just going to have to see which way price can break heading into October OPEX, which is tomorrow. And that's also a reminder on, if you do have something expiring tomorrow, you may want to deal with it today if you want to buy more time, or if you get a pop in something, take it off. It expires tomorrow, and that time decay will really accelerate through the day and into tomorrow as we head to expiration. So let's wrap it up there. Hope you guys have a good day of trading. This has been Chris Butts with Traders Profit Compass. Talk to you next time.